My name is Denise Cardozo, and I am the Executive Director of Silicon Valley Forum. Before we get started, I would like to thank our wonderful partners at Novarica, because this event would not be possible without their support, and we are grateful for our long-term partnership with them. A little bit about our organization, Silicon Valley Forum. We are a 37-year-old nonprofit supporting the global startup and technology ecosystem. We organize over 50 programs and events per year, including innovation programs, boot camps, technology programs, and women's initiatives, including our upcoming Women in Tech Festival, which will be happening on November 13th and 14th. I encourage you to all of you after this session to check out our website at siliconvalleyforum.com to see what we're up to and also register for the Women in Tech Festival. I would now like to introduce to you to our president and CEO of the Silicon Valley Organization, or the SVO for short. They are the parent company of Silicon Valley Forum, having merged with them earlier this year. We are very proud to be a part of the SVO family. So please welcome Matt Mayhood.
Thanks. Appreciate the kind introduction, and it's great to be with all of you this evening, or this afternoon, I guess, depending on where you're calling in from in this new digital age. Again, my name's Matt Mayhood. I'm president and CEO of the Silicon Valley Organization, and we're proud to become one with Silicon Valley Forum earlier this year, joining forces to make really a one-stop shop for economic development for Silicon Valley and the world. Our goal is to provide our members and our non-members in our community with the tools, resources, information, and the connections they need to be successful. As an organization, we have a fundamental belief that when businesses succeed, our communities thrive. And to do that, we are a catalyst for business growth, a champion for our communities, and a connector of leaders and influencers. And if you are not a member of the SVO, or you're not engaged with Silicon Valley Forum, we encourage you to check us out. You can look at more information about our organization at thesvo.com, or as Denise said, at siliconvalleyforum.com. We are Silicon Valley's largest and oldest chamber of commerce. So we are here for the long run. We are here to help you grow your business and to survive and thrive in these very unusual and difficult and challenging times. And with that, I'll turn it back over to Denise and hope you have a great webinar. Thanks.
Excellent.
Thank you.
Thank you, Matt. So getting into today's event, the topic of discussion today is digital adoption and how COVID-19 has accelerated disruption and what that really means for us, as well as the companies that we work for and the many industries. If you have any questions during this conversation, please put those questions in the chat box, and we will be sure to get to as many of those as possible. We have some incredible speakers joining us today from Cisco, CSAA Insurance, Salesforce, and Ficeri. Leading the discussion today is our moderator, Rob McIsaac, the Executive Vice President of Research and Consulting at Novarica, also a longtime friend of mine. So Rob, I'm going to turn this over to you now.
Thanks, Denise. Great to be with you all today. And, you know, we certainly appreciate at Novarica the long-standing relationship we've had with the Silicon Valley Forum, now the SVO. Just to give you a little bit of background on us and myself, and then I'll ask our other speakers if they would do the same. Novarica is a technology research and advisory firm that is focused exclusively on the insurance industry in North America, specifically as a geography. Insurance, unlike banking and some other industries, is regulated at the state level rather than the federal level. And so the United States has a very unique structure. We have 57 different state jurisdictions when you count the District of Columbia and protectorates. So it creates challenges across the board. And so that's one of the reasons that we have chosen to focus very specifically on that industry. We have a research council that is made up of 350 insurance companies in the United States and Canada. We also have 150 of those companies that have advisory relationships with us. My best analogy or metaphor for that is it's much like having a retainer fee with a law firm, and then they are able to view us as being strategic partners for them. And we do a lot of strategic planning work and technology strategy development in that space. I've been at Novarica for 9 years at this point and have responsibility for, as I like to say, the non-property and casualty portion of our business. We cover all lines of insurance, but my background before joining here, I had spent time in senior leadership roles in technology groups at companies like Prudential Insurance in New Jersey, Guardian Insurance in New York City. I was the the enterprise CIO for Pencorp Financial, which was a holding company for carriers based in North Carolina. Also spent some time at Nationwide Insurance, running their big core systems transformation efforts in Columbus, Ohio. And I spent 5 years as the enterprise CIO for a top 50 US bank. That's top 50 doesn't sound all that impressive some days, but when you consider there are 6,700 banks in the United States, it's pretty impressive. And I was there during the last financial crisis, and we acquired 9 other banks in 18 months, and I became very, very, very friendly with the FDIC and the Treasury Department when we did those workout deals. And I mention that because some of the things that happen in different lines of business or in different sleeves of financial services are beginning to bleed over. And this whole conversation around digital disruption and learning things in a world that's been heavily influenced by COVID-19, I think is actually really important for companies to be thinking about, both from a provider standpoint and from a consumer of capabilities. I did want to share one personal story. Denise and I met some years ago because I have a son and daughter-in-law who are both research scientists living in Silicon Valley. I ran Prudential's innovation group during the first .com era and set up shop in San Jose, but did not really understand all of the things that were related to the ecosystem that is there. And my wife and I did what I described as the geeks tour of Silicon Valley one time, visiting Stanford and Bill and Dave's garage and Mrs. Jobs' house up in Palo Vista and the Googleplex and all of that, and came to understand just how different the environment is when you have that close proximity, fueled by things like California labor law and access to private equity and venture capital firms. So for a guy who lives in Research Triangle Park in North Carolina, and so the good evening bit I know from Matt was for me, so it is getting dark here now, but it is great to be with you. I always enjoy my time in California, and I'm looking forward to what I think will be a great discussion. And so we'll go ahead and I'll ask others to introduce themselves. I'll start with Joel and then go to Dion. So Joel, great to be with you.
Thank you, Rob. Good afternoon. A pleasure to be with you. So my name is Joel Barbier. I have a dual role. I've been about 20 years at Cisco, and I'm actually part of a small customer transformation team at Cisco. Over the last 10 years, I've had roles as practitioner in digital transformation, including our internal transformation at Cisco. But over the last 5, Cisco has partnered with a management school called IMD, based in Lausanne in Switzerland, which is a leader in executive education. And we've established a little think tank to understand what's happening with disruption across industries and value chain. So I've also been a researcher in this area. And my background is in finance, corporate finance.
Well, thanks for being with us, Joel. And Dion, I'll pass it to you and then over to Deb.
Hi, this is Dion Lyle. I run my own consulting firm, Ficheri 25. I bill myself as the Rosetta Stone between legacy banks and fintech startups. I'm here in Silicon Valley, have been for years, and Rob, what you described, your visit here, we refer to as the petting zoo, which is when somebody from another area comes out, taps some startups on the forehead and says, wow, it's really cute what you're doing. They don't realize how transformational it can be. I see Debbie smiling. We overlapped for a minute at Citibank. She knows that tour all too well, bringing executives around. And there's just something about Silicon Valley, and I'm glad to be from here, glad to be here, and find it to be the heart of innovation even after all these years.
That's great, Dion. I should have said we bring groups of executives out there twice a year in non-pandemic times so that Denise and I can actually guide them through. But the idea has always been to try and give them a sense of how all those pieces interact. But yes, the petting zoo piece, I've heard that many times. So great to be with you. And Deb actually has spoken at some of our events in the past. So Deb, thanks again for joining us tonight.
Thank you. Happy to be here. Debbie Brackeen. I lead strategy and innovation at CSA Insurance Group. CSA is a AAA insurer, personal auto and home. We, by the way, I think we upgraded from petting zoo to Silicon Valley Safari, so as not to, you know, disrespect our very important executives, depending on who is coming. I've been privileged to lead strategy and innovation for coming on 4 years in my current role. First time in insurance, having been at Citi and doing innovation there for almost 6 years, and at HP prior to that. So kind of grew up professionally in Silicon Valley, 10 years at Apple to start my career, a couple of venture-backed startups, a couple of other companies along the way, but it's fun to be from Silicon Valley, and it's even more fun to combine that with working in a very 100-plus-year-old company currently in a very traditional industry, dealing with digital disruption. So happy to be here.
Thanks, Debbie. Well, great to have you. And Jeet, thanks again for joining us.
Yeah, thank you. And thanks everyone for joining. I'm Jitendra, I go by Jeet. Very happy to be here. It's an important topic for sure for all of us. I am on the board of directors of the Silicon Valley organization, as I was as well with Silicon Valley Forum. So very proud to support this organization and what we do in the Silicon Valley area. I'm at Salesforce. I run the global partnership with one of our, well, it's the largest partner that we have with Accenture. We run that globally. In fact, I'm fairly new to the company, but coming in really fast. Prior to this, I had a small fund, did about 14 investments over the last couple of years, a new fund. But probably what's going to bring a lot of content to this conversation was my time at Accenture before that, where I was a managing director of open innovation and the ventures program there over a course of 6 years. Background is technology, grew up as an engineer over the 27 years, and midway through started to take on more product leadership roles, general management roles across large companies like HP and Motorola, but also smaller startups and even mid-sized companies like Palm, for example, to give you some ideas, and Yahoo. So very glad to be here.
That's awesome. Well, it's great to have such a terrific and broad group. I thought I'd start just by sharing a little bit about what happened to us, and then maybe we can go around and I'll ask each of you in turn if you might provide some thoughts about it. One of the things I would share was that we were very excited when 2020 started, and we had at Novarica built a whole plan around what we were going to do. It was going to be a lot more in-person experiences. We had set up special events around the country. For the first time, we were going to be hosting things in some cities we'd never been to before. And that plan worked great for about 8 weeks. And then all of a sudden, everything changed. And we suddenly had to do things virtually that we'd never done before. We had to adapt to a whole new environment. We had to take our customers to places they'd never been before. This tool we're on right now was one that we didn't really use very much before, and then suddenly it became our lifeblood. And from that, one of the things I would say is that we've learned that there are a whole series of things that were bad assumptions on our part. It turns out we could do a lot of things virtually. It turns out we could collaborate in some very interesting and productive ways. And my sense is that we're never actually going to go back to what we used to do. The future for us will be some form of hybrid. But maybe Joel, starting with you and then going to Dion and then Debbie and Jeet, be interested in your thoughts. Anything that you've sort of learned from this experience that's informing what you're doing now? And how do you think it's going to affect you as we go through the rest of the pandemic?
Yeah, very consistent with what you said. The pandemic has actually hyper accelerated what we call the digital transformation, the modernization of what we were doing. And it's posed an immediate problem with incremental tactical things. For example, a quarter ago, we didn't know if we could actually close our books virtually. We had digitized most of the process, but we weren't quite sure that we could do it. And it's taken it's accelerated the next couple of years of efforts to do it. But more longer term, and this is really what transformation is about. It's really forcing the much harder conversation about the business model, operating model, portfolio evolutions, because a lot of the existing portfolio is suffering. And we see this, for us, but for our customers as well. And it's driving the business model change, right? Rethinking, how do we create and deliver value to our customers, and how do we capture, monetize that value?
That's awesome. And Dion, you must have a very interesting perspective on this, both running your company and thinking about your customers.
Yeah, so from my perspective, and I've said this since March, the big change is going to be flexibility. It's going to be the hybrid model. A lot of people came out right away, said, oh, we can all work from home forever. This is fantastic. Never need an office again. Going to call BS on that? We're absolutely going to come and go with offices. You talk to any single mom, anyone home with kids, they're begging to go back to the office as soon as possible. My kids are older and grown, but I do get it. The other piece that I've seen is local. So I'm starting to work with community banks more. Suddenly, people are wanting that local flavor, touch with their community bank. I've gone from shopping at a Safeway to shopping at Woodlands Market. It's a small 3-location facility here in the Marin area. And I think we're starting to appreciate our communities more. So I think that might be a positive outcome of this. But I think overall, it's going to be flexibility. We'll head back to offices in some partial way, probably mid next year. And it's just about being flexible. If you need to work from home, work from home. You want to come into an office, you need to break from home, do that, right? So we're still going to be seeing that morph. One final note, I hope others aren't going to do what Microsoft announced, which is if you move to Des Moines, we're going to pay you Des Moines wages, not California wages. I hope companies resist the temptation to drop wages to match where you live.
Awesome. So Debbie, I'd be curious about your take on that. And maybe since you've got this very large 100-plus-year-old company, how are you thinking about returning to the office? Have you got a plan at this point, or is that still flexibility and to be determined as to what's going to happen?
Yeah, we're still working on it. So I think if you would have asked anybody in our company a week or two before everybody started working from home out of necessity, which was around mid-March for us, and said, is that even possible? Most people would have said no. And like a lot of our claims adjusters and stuff have, desktop computers, not laptops, and same with some of our service agents and sales agents. So, that being said, we did it within about 7 to 10 days, and it was relatively seamless, and I think it surprised everybody. So that was a kind of a big wake-up call. And since then, at some point, we stopped setting a date when we thought we might consider going back to the office, and we just punted till early next year, and we're going to reevaluate. Meantime, we're working on kind of what Dion was saying, and Joel as well, some sort of hybrid model. So I think that we've, everybody was sort of in the honeymoon period. I think in the beginning, like, we don't ever have to go back to the office. Productivity's up. We haven't really had any hiccups. And I think there's a lot of fatigue now, and definitely dealing with home challenges if you have small kids that are also doing school from home. But I think we envision a hybrid model where some people can permanently work from home. Some people might have a set schedule when they're in the office and working remote, or that kind of thing. So, we haven't fully settled on the plan, but, it's definitely going to be some form of a hybrid and more flexible work from home model. The other thing I would just say is, as an insurance company, and this, Rob, one thing that happened when everybody started working from home is everybody stopped driving. And so, we had to do a lot of things like every insurer, and maybe many of you have been the beneficiary of a premium refund check or something like that, but people stopped driving. And so I think most insurers, including us, felt obligated to give back some premium to our policyholders because, there were no claims because people weren't driving, and it just seemed appropriate. We've done that on at least a couple of rounds of it to about $140 million in premium refunds for our $4 billion book. I think what my team has done from an innovation and looking ahead perspective is really just thinking about what are some of the behavioral shifts with customers that are ultimately going to be permanent, or not going to go back. And so one of the things for the few people who had auto claims, or who have had auto claims, we had to go virtual on everything. And the good news is we had already started some work, and we had a lot of touchless, computer vision aided photo damage assessment and stuff like that, where, it wasn't too difficult to adapt. And I think some of those things we aren't going to go back. But it's an ongoing conversation and assessment of, what's permanently changing, and we gotta kind of go with the flow or get ahead of it, and what might, go back to some form of hybrid.
Yeah, no, that makes great sense. I mean, I do want to come back and talk about some of the experiences that have happened in different lines of business. But Jeet, I'd also be interested, before we do that, in talking more about some of the things that you all are seeing in your world in terms of both the reaction to the pandemic when it first hit, and what your thoughts are now in terms of how you're going to go forward, and when you're going to make some of the changes you might anticipate.
Yeah, I think it's amazing to see the resilience in people. I think this is a really interesting time for all of us, and it is, not everybody's doing that well, but there are folks that have found new ways of doing things, and I think that's part of the human experience, is to kind of find that new within a downturn, a personal downturn or societal downturn, or a healthcare pandemic. And I think with that kind of attitude, you're also seeing companies, we're seeing companies really push on their digital agenda, their journey through a transformation. And, I think it's really important as companies do that they recognize, and I think it's natural now to recognize what is your ecosystem, right? And we're kind of, a few of us talked about that, right? The ecosystem is going to be really important. And also for companies, who their employees are, right? So for companies to understand who their employees are and what they're going through, for companies to understand their customers, their shareholders, kind of this 360 view, that informs the kind of transformation journey that they're going on. And I do agree that there's been some acceleration of that, obviously, in certain areas, but I think there's some new forms of what those motions could look like. One of the things that Salesforce introduced was just a way called work.com. It's kind of a hub to get all this information from various stakeholders that are part of a company, employees, customers, other shareholders, et cetera, and have this complete 360 view of it. When you have that hub, you can start to then look at the data to help inform you on what might be necessary to help your shareholders go through this process. So I think there's the theme in here of all of us being part of an ecosystem, personally, family-wise, friends. And once you have that sense, then I think when you start to see things like contact tracing, how all of us as employees of a company that has a contact tracing capability can contribute to that, to kind of help each other along the way. And that's one of the offerings that that Salesforce deployed with Accenture in partnership. So I think the idea of that we're all in it together, but there's human ingenuity and there's digital technologies and a process and the data to be able to get us to be getting through this in a smarter way, and in ways that we may not understand even right now.
No, I think that's absolutely right. And Deanne, you mentioned something about community banks, and it's very interesting to me to think about the different sleeves or tranches in financial services. One of the things that we've talked about on my end is that in financial services, so not to be confused with retail or other businesses, but in financial services, banks tend to be the leaders in terms of deploying new technology, digital capabilities. They tend to operate well ahead of insurance companies, in part because very high transaction volume businesses, very low switching costs, and a lot of transparency on what they do, as compared to, say, on the other end of the spectrum, life insurance companies, where it's very low transaction volumes, very high switching costs, and it's absolute obliqueness in terms of understanding some of the underlying product pricing algorithms and underwriting capabilities and things like that. So with those two as barbells, Debbie, one of the things I'd like to bring it back to, and just in terms of some of the things you said, the pandemic hit, and suddenly there's a lot of stuff that is manual or is semi-automated or partially digitized is one of the phrases we've heard carriers talk about. Is that something you encountered at CSAA, and was there a response you had to come up with in order to be able to address that, to allow things to move forward quickly?
Yeah, so the answer is yes. Although I would say that there was less kind of manual stuff than I would have guessed, to be honest. When we were in the office, my team sat sort of down the hall from the subrogation team, and when I got to the office almost 4 years ago, I was surprised that there was like a fax machine in there, and I'm like, why do we have a fax machine? Who uses those things anymore? But that team did. So we had a couple of teams that were slower to get fully out of the office and working remotely. We have a facility in Northern California that's still doing a lot of, I guess, paper-based processing. So we had a small crew who stayed working there, longer. I think there was some early stuff maybe around, like I guess we still cut checks, which also seems odd, but we still do that, like premium refund checks. So, but it was a lot less than I think it could have been. And the other thing that changed pretty quickly, but we were sort of well prepared for it. If you buy a home and you want to get it insured, sometimes you require a home inspection. And we send somebody out to kind of take a look at your roof and take a look at the surrounding property area. And that's a human-based process. But we were fortunate in that my team had partnered with homeowners to begin piloting and subsequently just operationalize the use of aerial, like satellite imagery and aerial imagery through a company called Cape Analytics to inform our underwriting decisions and kind of obviate the need for a human inspector. And while we hadn't fully gone all the way over to virtual, if you will, in that particular use case, we were well prepared to do it. And similar story with using photos in claims assessing of physical damage and stuff. So, I think it was a much better story than we might have anticipated if you'd asked us hypothetically before all this happened. But we still had a couple areas where we were manual.
Yeah, it's interesting to me to hear you say that, and I'm not totally surprised because property and casualty companies tend to operate about half a decade ahead of life carriers in terms of their technology capabilities and where they are in an adoption curve. So in contrast to that, many life companies were actually surprised at just how manual things were. And we hear stories about people being sent into buildings literally in hazmat suits to deal with all of the paper checks that were being printed. Obviously, that curtailed after a while, but what it has done is it has forced a lot of those companies to adopt digital capabilities much more quickly than they might have otherwise. Some cases, it was because they actually had these things sort of in the can and they were ready to go, and they just weren't being accepted by either their customers or their distribution partners. In other cases, it's very much a Rube Goldberg kind of thing that we've seen. More than one company has shared with me that the operating model for them, for those who remember the movie Apollo 13, was a guy dumping out stuff on a table and saying, we need to build one of those out of all of this, describing the filters that were used on the spacecraft coming back from the moon. And it's worked in the main. So, we hear many companies saying, it's worked surprisingly well for us. But it's also, I think, illustrated that we've had this dramatic collapsing of the expectations around digital capabilities. And so we see now in some research that we've done, reprioritization about how investments are going to take place in 21 and 22 around digital capabilities. So Deanne, I'm wondering from a banking standpoint, anything that you've seen that, was sort of an aha moment or a surprise beyond sort of your focus on going local?
I wouldn't say it was a big surprise, Rob, but one of the things that really jumped out with the PPP lending and all of that was how much COBOL code still exists in the bowels of all these organizations. And I remember a couple of years ago, I was presenting to the HSBC CIO, and I made a joke about, oh, I coded COBOL in college. And he said, do you want a job? And I'm like, no, I was horrible at it. He goes, I don't care. I need coders. So when this hit, there was a sudden surge of COBOL coders getting paid thousands of dollars a day to come in and work to connect new systems to old. And I think what happened, the wake-up call for IT people was, oh, wait a minute, we've been ignoring our technical debt for a long time. That technical debt came due. COVID said, here's your bill, you owe us 10 years of non-innovation. Here you go. You're going to have to get rid of the HP 3000. You're going to have to get rid of the COBOL code. You're going to have to build a more modern architecture. And so the question becomes, how do you continue running the bank and moving to a cloud-based, API-based, JSON modern architecture? That's the part that I think came home to roost for every bank, whether it's my friends in the community banks, mid-tier, or Debbie and I are all peers at Citi who are struggling with how many lines of COBOL code are out there and what to do to modernize that infrastructure. Technical debt is due, you got to pay.
Yeah, I think that's a really interesting point. Jeet, I'd like to come back to something you mentioned before. You were talking about data. And one of the challenges, speaking of old mainframe-based COBOL systems, or dare I say assembler-based systems, is that it is very difficult sometimes to extract data to be able to turn it into insights. But I think one of the things that you all have been doing is working, some of the description you had of the work with Accenture, but other things going on at Salesforce to try and enable access to that data to allow an acceleration in terms of decision making. Any insights that you've seen that you'd want to share with the group around things that you see that are working?
Yeah, I mean, I think when we talk about digital transformations, yeah, first of all, I agree, I think, with Dion and Debbie and everybody that we've been talking about. There's an acceleration that we're seeing as well from the Salesforce side of movement to the cloud, or an acceleration of the sophistication of what they're doing in the cloud. And obviously the company is very well positioned for that, and is a major supplier of that and a pioneer for operating in the cloud. But along this digital transformation journey is this appreciation of the role of data that we have. And this idea of being able to get access to data across the enterprise, across the company, the amount of data that's associated with an employee, not only the employee, but where they are at a given time, and it doesn't have to be an employee, it could be a customer, or the things that they're interacting with. When we start to bring IoT into the story as well, you're getting a much higher resolution of what's happening on your operating plane as a company, right? And so, the classic thing is, you have this data, it gives you a reflection of what's happening in the field, in your customer markets, in your employee, work areas. You have a sense of what's going on. How do you take that data and marry it then to your decision making? First to your IT plane. So what are your systems doing with this data? How are they digesting this data? But then how are you going to turn those data elements into insights, right? So actual insights. And then, of course, once you have those insights, what action are you going to take because of what you're seeing? And those actions could be autonomous. It could be kind of feedback loop that happens automatically, or it could be humans that need to look at it and make decisions. And I think that whole kind of loop of the data flow and the ability for humans to see what's happening on the ground, so to speak, and to make decisions, and systems to make decisions, that's an accelerating process. And I think we're just seeing that it's a virtuous cycle. It's a cycle, though, that requires, let's say in this case, companies to take a lot of responsibility. They need to own that responsibility of being good stewards of that data and to make the proper decisions from that data. And trust needs to be a big part of this whole process. And so I think we're going to see, and we are seeing, where that sense of responsibility, the sense of trust, has to be a really strong part of a culture of any company going through this process. Because without that, I think there's a very vulnerable kind of place that we can all find ourselves if we don't trust what's happening. And that's a very important core value of Salesforce itself, the company I work for. But it's more and more, I think, top of mind with our companies, our clients.
Oh, that's great. And Joel, I want to bring this conversation around data and turning it into insights back to you. But one of the things this was not intentional, but this conversation has actually taken us to, from a Navarrica standpoint, there are three things that we see as being foundational to companies being able to move ahead. And we talk about data, digital capabilities, and their core systems as being those foundational elements. And so ironically, to Dion's point, legacy systems are great if all you have is legacy customers. Digital experiences are fantastic unless they're built on bad data, which then create really good looking but terrible digital experiences. Any insights that you've gained through the course of the pandemic, and as you look into the future, about how you all are thinking about this intersection of data, digital experiences, and managing customer expectations going forward?
Yeah. So what we found in our research, and this is not just in the pandemic, but is that one of the foundational capabilities of companies to change is what we call in our research digital business agility. And so we've looked at what are the capabilities, what are the competencies that companies have, what are the organizational capabilities that can actually build agility. And I want to link this back to data. We're finding that agility is the result of three capabilities that have to constantly work together, right? The first one we call hyper-awareness. It's the ability to capture information, about your customers, your employees, your operations. Jit, you were talking about IoT, your market. The second one is to make sense of that information, to feed informed decision-making. And so the ability to apply automation, analytics in the depth, not just for strategic decision makers, but in the depth of every step of processes. And then, of course, as you make informed decisions, the ability to execute quickly, execute faster than your competition. So that's the ability to move resources, talent, technology, processes faster than your competition. And so this is absolutely foundational to drive the ability to change. And it sounds pretty obvious, right? To be listening, deciding, and acting. But in reality, a lot of the organizations we work with, they actually struggle with being scientific. The most disruptive firms are a lot more scientific about how they make decisions than some of the traditional players. So the one thing that we found disruptors have that incumbents must learn is this ability to build agility in the operating model.
Yeah, that makes great sense. And Debbie, I'd like to bring something Jeet mentioned back. Jeet mentioned one of my favorite words, which is culture. And Peter Drucker at one point famously said that culture eats strategy for breakfast, right? So organizational culture, it always has an impact on where and how companies react and respond. But insurance carriers, and to a lesser degree banks, are very conservative by their nature. And when I worked at companies like Prudential and Nationwide, one of the things that I thought of as a reality was that there was a corporate immune system that would work very hard to kill off things that looked like they were different or unique or challenging to the status quo. So you're at a 100-plus-year-old company, you're focused on innovation, you're in the middle of a pandemic. How's that working out in terms of the corporate culture, and how do you influence that?
Yeah, great question. Well, I'll say that one of the reasons that I was excited to take the role that I have now at CSAA is in large part because the company has a fantastic culture in a lot of areas that are just, I think, nice for employees. A real true commitment to volunteerism and philanthropy and giving back to the communities that we do business in and the people we serve. Diversity and inclusion, which is very important to me personally, and obviously very much top of mind in the news, this year in particular. But, it was a little bit of a surprise to me, I have to say, given that insurance is in the business of accepting risks and underwriting risks to learn how risk averse, you know, I think the industry is, and I don't think our company is any exception. You know, that being said, this doesn't have anything to do with the pandemic, but one of the earliest things that I realized we needed to do as, you know, 100-year-old personal lines company, primarily in auto, like probably 2/3 of our book in personal auto, and then the rest in home and PUP, personal umbrella policies, was that we, you know, if you believe in the long-term existential threat of autonomous vehicles and liability shifting from personal liability to product liability or something like that, or the near-term impact just of the sharing economy and new mobility models, to me it was quite clear that we needed to diversify away from personal auto. And that was probably a 2-year journey for me, building the buy-in and helping my peers and our CEO and board getting comfortable diversifying into commercial. And the part of commercial auto that we decided to focus on was the kind of, we call it the new economy commercial auto. So thinking about, you know, platforms like Uber and Lyft and Turo and those kinds of, you know, rideshare and car share platforms. And I'm happy to say we launched a company. It's called Mobilitas, and we just, so almost 2.5, pushing 3 years later, you know, we were able to make that pivot. That company recently was in the news alongside some top 10 insurers, and pretty exciting for that to happen. But I tell that story because I think the culture matters a lot, and it isn't easy. There's still a little bit of an immune system. The immune system I'm in right now is a little nicer than maybe it was at Citi when Dion and I were there. But one of the things that we did maybe around the end of April that speaks to our culture is we were just feeling like, and we only have 3,800 employees or something. We were feeling this angst coming from employees, like, is there something we can do? You know, and in particular, because people weren't driving, like we had a whole bunch of service and claim staff who maybe were not as busy in a normal way as they were used to. And we ran our first ever company-wide innovation challenge. And we kind of, it was two-pronged. It's like, what can we do to better serve our customers in this situation that we all find ourselves in? And just what can we do in general that might be beneficial, you know, out there in the world? And one of the ideas that was, I think it won the most innovative idea, was to redirect some of our underutilized staff to help cities and states do contact tracing. And it was kind of a crazy idea, but we're actually now doing that. I mean, we've actually booked, you know, a nominal amount of, but in the millions of revenue from cities and states in the parts of the U.S. where we operate, doing both processing, contact tracing, and also unemployment claims. And it, you know, this is not a sustainable long-term business, but it is a way to preserve jobs in, you know, in the face of, you know, obviously a big economic shock, and I think we're going to be in a recession for a while. And you know, people feel so happy to be able to give back in that way. And, you know, it has led to a conversation like, is there a, I don't know, third-party administration kind of business that we want to, you know, spin this into, you know, when we get through the pandemic and through processing some of these pandemic-related claims. But, you know, I think humans are kind of the same everywhere. I mean, they don't really like change. And so no matter where you go or how great the culture is, you're always going to deal with that to some degree. But I think, you know, just perseverance, resilience. I know Jeet mentioned resilience earlier, which I totally agree with. I mean, one of the gifts of this horrible situation is seeing how resilient we all can be as organizations and certainly just as individuals. And it's kind of cool when you can find a way to make lemonade from the lemons, you know, and find a way for people to feel like engaged and like they're contributing above and beyond maybe a normal situation.
You know, I think that's a really powerful set of statements. When I ran the innovation group at Prudential, one of my experiences was that there was a constant battle against the culture. Um, I was fortunate that what I was doing was sponsored by, and I had a very close working relationship with the vice chairman. So this was actually funnier to say in a non-pandemic time, but in effect, I was inoculated, and I was allowed to do things because I had his backing, but it was sort of a mutually assured destruction. People could try and blow me up, I could then blow them up, and then we would both be gone. So it was very interesting to try and navigate through that. And part of the reason that I moved my group from Newark, New Jersey to San Jose, California, was not that I wanted to be in San Jose. That was sort of accidental. It was a great experience, but the reason was because I just had to get away from the corporate world where every day was going to be a battle against those things that just wanted to focus on the let's do business as usual stuff. Mm-hmm. And you see and hear stories, some of the things you're doing. Mass Mutual has their operation in New York City called Haven Life. Allstate had Esurance in San Francisco until Esurance effectively became what is Allstate in many ways. And there are other examples of that. But this notion of how you navigate and work your way through these things becomes really key. One of my mentors years ago asked me, you know, what's the fastest way to get from point A to point B? I thought, you know, I learned this in geometry. I'm pretty sure it's a straight line. And he said, yeah, it's never the answer. It's like being the sailboat captain. You've got to be prepared to look at where the wind is and always be tacking. That's how you actually get from point A to point B in the fastest way. And I think that that's a pretty interesting insight, especially now. And Jeet, maybe I'll bring this to you. You know, one of the things that we talk to companies about is it may have been nice to have a 5-year plan. It may have been great to have a 3-year plan. But now agility really matters a lot. You got to be able to adjust and adapt to what's happening right now because the circumstances are changing. Is that consistent with what you're seeing? And do you have any thoughts about that, assuming that it is?
Yeah, I agree. I mean, I think the pandemic dislodged everybody from their static way of going things. So whatever static cultures we may have been parts of and is pretty much disrupted, right? So cultures are disrupted, maybe is the way to say that. You know, my employer, Salesforce, has always been, you know, technology has been in the cloud. The operations of the company has always been in the cloud. So it's always had this kind of view of constant change. And what's really admirable for companies that do this is, you know, how they interact with their communities, right, with their shareholders. I mean, this is kind of this ecosystem thing I was mentioning. But yeah, I think that companies have an opportunity now because we've been dislodged from static state to just survive. Okay, so that's part of it, right? And survival could also mean investment or accelerating their investments into their becoming a digital company. Becoming a digital company really affords you the opportunity to be a lot more fluid in the way you go. Now, of course, you have to have a great strategy of what you're going to do once you're a digital company. You still have your shareholders that you have to report to in the street and so on and so forth. There's those things still, but it's dislodged a lot. Moving to the cloud in particular is dislodging how operational efforts can be done and into a more fluid state, and how the data and the insights are at the fingertips now in order for executives and boards to have a transparency across the organization. So you don't have these pockets of stasis, right? And you don't have these kind of bastions of immovability. It's a very transparent world. And that I go back to, companies have to be a lot more responsible with now how they look at their companies and their interaction with the shareholders, because the data is such an important part and trust plays a role. So yes, I think things are moving in a much more fluid way than they had been before. I think there's an acceleration to digital, and I think data is causing us to be more responsible in that agility that we're seeing moving forward. And it's going to call for new types of leaderships and new types of cultures to be able to keep up with what we've started in the pandemic. And of course, we'll start to see some companies, I would imagine, that are going to kind of fall back into how they're comfortably moving if they haven't gone through haven't got to escape velocity yet. But there's opportunities for those companies that are pushing on a gas pedal right now to escape through that and get to more of a fluid state.
Yeah, no, I think that's absolutely right. So, Deanne, I'd like to bring this back to you, and we've only got about 5 minutes left, so this becomes sort of the speed round. But speaking of stepping on the accelerator, as Jeet is, none of us are gifted with prophecy, or at least I'm not. But when you think about what we're facing today and the environment we're in, are there any specific innovation investments or capabilities that you think are going to be really important as you look at the next year or two or three for companies in financial services to be mindful of, or any themes that come out of that, if it's not specific investments that are going to be important to consider?
Well, obviously AI is going to get all the headlines, right? But there's ethics around that. But I'm actually going to go a little old school on this and say optimization of process, right? I think what's often lost in digital transformation is that you have these processes that you still need to do, insurance more so than banking even, but you still have to process customers. You've got to onboard, you've got to process a payment or process an application. And when I look, community bank, mid-sized bank, and big bank, those are still very manual processes. And so a lot of what I'm starting to see is people waking up to the fact that the accounts payable clerk is working from their living room and can't go over and do a check run, right? Check runs still exist. That's the fact. So I think a lot of what we're going to see in the next 2 to 3 years, and I see the VCs picking up on this. I wrote a blog this morning about accounts payable automation, just got $350 million in investment this year. It had $1 billion in the previous 2 years. That's accounts payable automation. It's one of the most boring, staid paper things you could do. But that's where I think a lot of money is going to flow, and there's going to be a lot of digitization. With that said, there will be AI overlay onto that to make it smarter, better, faster, more predictive. But that's where I think it is, just literal process automation.
Yeah, I think that's fascinating. And you're right. There's a lot of things that are manual or semi-manual out there where, you know, that gets compounded with the fact that in many skill areas, we're seeing a fairly significant and dramatic aging in the labor force that has been doing those jobs. One of the things we saw in some companies was an acceleration of people taking early retirement. So if companies had knowledge management problems before, oh baby, did it get a lot worse when that started to happen. So I think you're absolutely right. And turns out that just automating bad process is not really a great idea either. So it gets right back to the optimization that you're talking about. It's really important to think that stuff through in order to do it. So great set of insights there. Joel, anything that you would share in terms of what you're sort of thinking about or seeing in terms of where some of these investments or innovation focused activities may take place as we look into the future?
Yeah, I mean, to build on what Dion said, I think companies must balance the sort of the incremental changes with what I would call, you know, true business transformation. And the challenge is that the vast majority of companies actually struggle with business transformation. What we're finding in our research is that probably about 1 in 20 really captures the full return on their investment on digital transformation. And we were talking about culture earlier. The one thing that most companies struggle with is to essentially mobilize across the ranks, right? Most companies actually struggle with cross-functional. And so we think that a different approach to change, one that uses an orchestration approach is actually necessary when considering digital transformation. But at the same time, the rewards are very high. If you look at how value was created over the last decade, it's 2 or 3% of companies that have truly evolved their business models that have created about 40% of their shareholder value creation. We ran this analysis over the stocks of 10,000 firms. And it's the ones that have been able to build the platform, the ecosystem orchestration models that have overwhelmingly captured. So it's hard, but the rewards are high. And we suggest that the traditional change management approaches can typically be very, very hard when considering these deeper transformation.
I think that's a great insight. And I want to pick up on the use of the word rewards there. one of the things that we've seen that has been an impediment to actually making big transformational changes and to the implementation of innovation as well is that in many cases there are instantiated reward programs, how people get paid, which discourage moving towards doing things in a new and different way and encourage sort of staying with the status quo. Even if it's not optimized for the enterprise, it's optimized for me personally or for them personally. So thinking about those reward structures become really important if the company is going to be able to drive the value from their investment. So I think that's a really key insight. Denise, I know we are at the top of the hour. This has been a remarkably fast hour back here in the East where it is now fully dark. I want to thank everybody for joining us. I think we are going to have to leave it there because I know everyone has things that they need to do at the top of the hour. But from a Novarica standpoint, we really appreciate you all joining us today. To Debbie, Joel, Dion, and Jeet, thanks again for participating in this. I'll look forward to continuing the conversation. And I'm looking forward to getting out to Silicon Valley again when it is safe to do so.
Yes.
So Denise, I'll see you soon, I hope.
Can't wait to host you. And again, thanks on behalf of Silicon Valley Forum for everybody who attended today. This session has been recorded, so we will be sending this out to our subscriber list and our newsletter, as well as it will be posted on our YouTube channel and promoted out through our social media. So check it out there and share it with your friends and colleagues. And everybody have a great rest of their week. And thank you so much.
Bye-bye now.
Bye.
Thank you.
Thank you, Rob.